Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 12th of March, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We'll go through our usual regular run through in here today. We'll take a look at the calendar, what we've had, what we've got coming up. We'll take a look at the articles from the Daily News Wires, what's going on in the world of macroeconomics, the fundamental geopolitical events, the central bank events that are potentially influencing financial markets right here, right now. And then we'll take a look at various charts and see what's going on from a chart perspective. So kicking off with the calendar, I mean, the all-important, all eyes today on the CPI data from the US. Important piece of data, obviously looking for inflation to continue to slow. I'm actually expecting, I think, small upticks in some of these numbers in here. So February's number looking at 2.9% compared to 3% and 0.3 on the month-on-month compared to 0.5. But I'm just wary of any of them coming in higher than expectations, and there's some concerns around that. And the article we're going to look at shortly showing that potential that the market's in under threat of, if we get an inflationary shock, it's even a slight shock, if it's even a tenth of a percent above expectations, market's really unlikely to like that in here, particularly in the current bear theme that we're on in here at the moment. So we've had going on since February. So markets, I think more vulnerable to the downside than the upside. So potentially vulnerable to a higher print on inflation rather than a lower print. A lower print would be a nice surprise. Could equally, though, a lower print could see markets caught out, and we could see then the fact that fast money is short in here at the moment. Then we could see some short covering going on and a potential short squeeze. So an important piece of data today. Markets are slightly rebounding as we go into today. We'll talk about that shortly, but primarily due to some hopes around a potential Ukraine indicated potential for a ceasefire in talks with the US in Saudi Arabia yesterday. So that's obviously going to be taken back to Russia, and then we'll see where we go with that. So there's a slight positive coming through from there, which is seeing European markets bolstered and buoyed higher this morning. Futures also ticking higher in the US, having had further weakness, ongoing weakness that we've seen more recently so far this week and since February. On the negative side, though, Trump's still around 1 million tariffs kicking in here. Still a man kicking, and also threats of even larger tariffs as well. So 25% tariffs kicking in with Canada, and again sparring with Canada in here. If I just pop this one out, talking about potentially even higher tariffs as well going forward. Downplays the risks of tariff-led recession from Trump in here, even though kind of maybe hinted at it. Markets are still looking relatively negative. Goldman Sachs lowered their target for the S&P 500 to the downside, and there's an article here from JP Morgan now putting in, I think it's a 40% risk of the US going into recession in here. And Tesla continues to be hit on the downside, particularly 52% off its all-time highs, nearly giving back all the gains since the election in here, and looking rather negative. What else are we have in here? So Canada Energy Minister warns of pain on both sides in trade swap. We just pop that one out. S&P 500 futures on the overnight, as I said, edging higher ahead of this inflation data. The main market focus in the European stocks also buoyed this morning, I say, and US rises after Wall Street set off tariffs inflation data in focus. European shares rise as Ukraine ceasefire hopes lift sentiments. Already spoken about that. And US inflation seen elevated in February with higher food prices. So watching out for some of the breakdowns of the inflation numbers as well. So all eyes on CPI. Let's say we've got that in just under 1 hour now. Shaky US stocks face larger downside risk to inflation surprise. So I'll share this one. If you do have access to Bloomberg, it's worth looking at this one. This is basically a scenario analysis of where the core CPI print is going to be in here relative from Goldman, JP Morgan, and what it could then end up meaning for the S&P 500 on the day. These are potentially on the day in this, so the potential swings, the risk reward in here, and the late gains fall as much as 3% if inflation comes in hot versus a 2.5% gain if it's cooler. So have a look at that. That's a kind of interesting scenario analysis. Gives you an idea of what could happen if the numbers are out of line with expectations. JP Morgan obviously a 40% US recession risk in here, and so that's not good. and Goldman Sachs lowering its year-end target to 6,200 for the S&P 500. Still high though, right? Given that it's 10.6% higher than where we are now, so it's adding in 10% from now. But nevertheless, that's a reduced target from them. Looking around the overnights in here and the Asian exchanges, Nikkei relatively unchanged on the day with the Hang Seng down 0.75%. European bourses, as we said in here, buoyed higher by positive sentiment regarding potential Ukraine. 0.6 higher on the UK FTSE, 1.7% up for the German DAX and 1.3% for the French CAC in here. And US futures also buoyed higher, nearly 1% higher, 0.9 up on the Nasdaq this morning and 0.8 higher on the S&P. Turning our attention to the interest rate market, still we've got this meeting next week from the Fed. Still very little chance of a rate cut, practically no chance. We go to May now, as we said before, 35% chance now of a rate cut in May, but still relatively unlikely. But by June now, pretty much nailing on a June cut in the only 21% chance that we don't get a cut by June, and pretty much now done we get a cut by July. And potentially in here now, 50-50 chance we've had either 2 rate cuts by July or a 50 basis point cut by July. And now by year end, pretty much the bet in here, we get at least 3 cuts or 0.75% lower, potentially more going into the end of the year from the US. Yields are tracking higher though in here, so it's lower prices, higher yields, and potentially setting up a double bottom in yield, potentially double top in pricing here on the 10-year if we get above 4.37% in here. So that's a level to be watching, which could open up actually higher yields, which is normally negative for stocks, but higher yields in this scenario is probably going to be positive for stocks in here. We still maintain a positive outlook right the way across the curve, though, in here on our interest rate markets on the 2-year, 5-year, 10-year, 30-year note. Despite the moves we've seen lower in here over the last 24 hours, underlying themes remain bullish, but they are subject to potentially moving the other way. S&P and Nasdaq still feel very, very negative if we look at the charts, but now getting kind of a little bit overstretched in here. And if we do go to the chart in here, both this is the Nasdaq on the 30-minute chart, this downtrend line that comes from the end of February, markets flirted with it previously, flirted, and look, it's not too far away now. Should we get above 19,850, we would be reversing that trend line. So certainly above 20,000 here would see the Nasdaq reversing that trend line and then potentially seeing a more bullish threat. And that's the threat, I think, going into the inflation numbers. If we do get some kind of bid, we could get a short. Remember, we've got a lot of shorts in here over the last few weeks in here that could get squeezed out. Similarly, on the 30-minute chart, this more accelerated trend line, if we redraw this more accelerated trend line in here, but you see on the S&P, you can see potentially above there. We get above the more recent high around 56, 53, 54 kind of area, reversing that more accelerated trend line could create a small basing pattern in here and open up upside. All the rest remains at the moment, I must stress, to the downside. Bear trend, trend's your friend, lower lows, lower highs, downtrend lines are still intact in here. So all looks fairly negative. However, we could see a short squeeze on a slightly cooling of inflation in here. So watching out for that going into today. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Back to Duncan for you tomorrow. And until then, stay safe. Take care.